Hello, everyone, and welcome to another Wall Street for Main Street podcast. Today we have a returning guest, Mark Thomas, formerly of the Silver Price Advisor, now StockTradingCoach.com. Mark, welcome back.
Glad to be back. How are you?
I'm doing well. First things first. You used to have a service called the Silver Price Advisor. You've discontinued it. Just tell our audience why you decided to.
Well, with silver, I got into it in December 2010, and I made a great call and got out in May, December 11, and I had kind of walked away from the market because I thought it was kind of done. And in the summer of 2012, I got back in it, and I had a quick pop and a very nice move, and it kind of led me to believe that the market was back, and it just wasn't. The last time I came on the show in December, I said I thought silver might go to $40 in 2013. And I did say that I wanted to be long in Japanese yen instead of U.S. dollars. But within a couple of months, I think it was around the beginning of February, silver had fallen to below $30, and the companies in the industry were doing things that I just didn't agree with. They were trying to buy growth, and the valuations were falling apart. I just got a bad feeling for it, and because I have a very low tolerance for losses, I said, you know what, I was wrong. I'm going to admit my mistakes. And, since I'm advising other people, it means even more to me than when I'm losing money because I know other people are. So I said, get out. And I said, get out and stay out. And I closed the whole thing down.
All right, that makes sense. I personally think silver is the worst market to trade in. I do think I think it will have its days because a lot of the miners, the cost of production, silver's at the prices below cost of production. The average silver company is $26 just to get an ounce out of the ground. So I personally think it will be like natural gas, where natural gas is now really booming in price. And, for a while it was below cost of production, and something had to give. And when that day comes, I don't think anyone will know, but I don't think it's something to be traded in. I think it's more of investment, and then the physical metals, wealth insurance. That's just my personal opinion. But you've moved on to the stock market. And you were just talking that the stock market you've never seen a market quite like this. Can you explain to our audience what you meant?
Yeah, well, I've been around stocks and financial markets since 1990, and I've seen some pretty good times and some pretty bad times. But I'm telling you, these last few months, I was just thinking about it this morning. I can't recall a time that has been quite this good. I'm a more value leaning investor, and when I trade, I'm more conservative and on value stocks. But so in the big boom days of the late 90s and everything, I was struggling when tech stocks were going crazy and everything else. But in the end, you have your day. But I really think that lately I have seen powerful moves in stocks that I have not seen in years, and it's throughout the entire market, large cap, dividend, although that's not where I focus. I focus mainly on mid-cap stocks, which are in between small and large cap stocks, and I just keep seeing where whenever I see value where it remains, it usually would take months to uncover and everything, and now it's taking sometimes a matter of weeks. This is a powerful market, and it can be traded. You can invest in it. Now, obviously, like everything right now, it's pumped up with some artificial stuff, but as long as you realize that and, don't get all headstrong and stay in something when it goes against you, there's money to be made.
Yeah, the stock market has been going at all-times highs. Right now I'm seeing it looks like it's like sort of a fight. I personally think they're going to announce more stimulus soon, and that will push it up a little more. Your most recent gain was Boyd Gaming. Can you tell our audience a little bit about that one?
Well, that's a stock that I have followed since about 2002, and it was one of my biggest winners in like 2004. They're a regional gaming company, but they mainly were in the Las Vegas locals market. When I say locals, that means that off-strip and people who live in the city and work on the strip, they usually gamble off the strip. And obviously the bubble in Las Vegas hurt them dramatically when housing crashed and unemployment went from about 6% to 14%. This is a stock that was left for dead. It fell from 50 at its high down to 5 or 4, and it was about it was $8 last week, $8.40 I think it came into the week, and it has some positive catalysts going forward. Number one, they just did a merger with another regional gaming company in the Midwest that I had looked at the numbers and I thought, wow, this company is going to go back to being profitable, and that's the first catalyst. Number two, they own the Borgata, New Jersey, which New Jersey has gone to full online gaming now, where they're going to have not only poker but all gambling legalized online for residents of the state. And third, the Las Vegas economy is getting better, so they have three kind of catalysts. And I thought it would be a few more months before they came out and said something as positive as they did, but they came out Wednesday with earnings and said that they're seeing better things in Las Vegas. The New Jersey thing is probably not going to be till November, but they said they expected to be one of the first out of the chute. And the stock exploded. It was up by about 30% plus this week. Now, I think I only got about 12% gain on it, and that was because I didn't go into the earnings owning the stock, which was a huge mistake. But the good thing on mid-cap stocks is that morning I think the stock only opened up from 9 to 9.60 and then closed the day at 11. I mean, that's here's an example of in a mid-cap stock, it opened only up 5 or 6% and then was up 20-something% by the end of the day. And that's the difference in a mid-cap stock, because there's not thousands of people following the stock and dozens of analysts, and they're reacting immediately, and all the hedge funds and everything else. You just get opportunities like that, and that's when I messed the trade up and not being in it at the right time. So that gives you an idea that there are great examples out there. And the new service I'm running, the StockTradingCoach.com, this is what you get from my service. Basically, I give you my picks and guide you through the whole process, lay out a game plan, and then tell you every single thing I do. And I make it to where all you have to do is replicate the trades and do 90% of the work for you, and then you keep all the profits less the cost of the service, which is very reasonable. So, that's the kind of thing that now that doesn't happen every week, and that was a very unusual week, and that took years to set up that way and everything. But I have another play this week that is similar that might work out with a decent gain.
That sounds good. And the thing is, you talked about the stock market creates tremendous opportunity. Do you see the stock market continuing to rise in the short and long term?
Well, I don't know. The short term here, this market needs to consolidate and churn, and we've seen some rotation in it lately, and then it powered up again a little bit here. But it'll probably follow the normal saw in the summer, getting a lot tougher and everything until the fall. But that's okay. As long as there's opportunities out there, and I'll get a little more choosy of what I do and everything. I don't know. I've learned that over time, I'm not, especially in this market this year, it's just almost a fool's game to try to decide what you think it's going to do. I just let the price action of it tell me what it's doing, and I go along for the ride.
Yeah, I remember last summer everyone was worried about it was going to crash. I personally think if they didn't do the QE3, it would have crashed. Do you see just anytime there's any sign of a sharp correction, it won't crash because I think more cheap money will be flooded in the economy. Do you agree with that sort of long-term sentiment?
Well, everyone right now, the consensus is that this is going to go on for a long time, and it's open-ended and everything. And I'm growing more concerned that it's not. The dual-edged sword with this is, especially the higher the stock market goes, and the better the economy gets, even if it's incrementally, the Fed isn't stupid. They're going to realize that they've got a mess on their hands and that things are getting very bubbly. And they're going to realize they're going to have to taper this down and everything. I'm not looking forward in the next few months, but I think by the end of this year, everyone is going to get it through their thick heads that this is not going to go on. This party's not going to go on for 2 or 3 years like they're thinking it is right now.
So you think they're actually going to clamp down on stimulus?
I just think that they'll end the quantitative easing, and they'll probably do it stupidly like they have done the last few times, and when the economy slows, start it back up. I don't know. But the important thing is it's very simple. This market is driven by fundamentals right now, probably 30, 40% fundamentals, but it's 60, maybe even 70% liquidity driven, and when they turn the tap off, that affects it a lot. Now, there's a lot of other things in the world that's putting money into U.S. stocks right now, not just that. The money flowing out of Japan right now is a big deal coming into the U.S. stocks. People with no yield at all coming into U.S. stocks. People who their things have run off now and they've got to do something for yield, et cetera. There's a lot of other things that are driving liquidity into stocks right now, but nothing compares to like the Fed pumping $40, $80 billion a month into the financial system. And the reason that's a big deal is if the banks were lending and everything right now, that would be going right out the door in loans and everything, but they're not. There's, number one, there's not enough demand for it, and number two, they're tight with it. It's going into financial assets and causing excess asset prices. So, that's where we're at. And while that's a negative long-term, and while it's causing imbalances in asset prices, for now, there's money to be made.
All right. I definitely see that. In terms of your trading philosophy, what do you use? Technicals, fundamentals? What is your philosophy you like?
Well, I've always, by personality, been attracted to conservative stocks. I'm a contrarian by nature, so I'm looking for value. I used to be more of an investor, but I'm pretty much a trader now, and I basically swing trade. I'll hold a few days to a few weeks, and if it's really good ideas, I might hold them a few months. I'm an old economy person. I will not trade technology stocks at all. I did trade Apple a couple of years ago, and I made a really good call on it, and I liked Intel last December at 19. It's about 23 now. But I will not trade technology stocks. I try to just go at it like they use that term in a grinder. I like to get singles and doubles versus triples and home runs. I try to, like in a market like this, I can usually win on two or three trades, which is very difficult to do. And as long as I keep my percentage gains, more than the losses, I do really well. And if in a worse market I get down to a 50-50 win-loss ratio, as long as I manage the gain and losses, I do okay.
All right, and so you basically use mainly fundamentals. And one thing I notice about your newsletter is I never see you do any inverse or shorts. I guess you stay away from shorting when you trade? Well,
I don't lean toward it as much, but right now, I'm not attracted to shorts. The main time I use shorts is there's a strategy called market neutral trading, where it's a paired trade, where you go long, like say you're long Coke and short Pepsi, And you're doing that because you're betting that Coke will outperform Pepsi, and yet you want to be market neutral. So if like that sector did have bad news, if they both fell, you would be hedged somewhat. That is more of a strategy I like, but that's for basically a volatile market, like last summer where it was going nowhere but was volatile, or in a violent bear market that works wonderful. But in this kind of market here, it just doesn't pay that much. Now, in this kind of market, the one thing that would be interesting is if you really like the stock and you just wanted to short the index against it and be hedged somewhat, that would be a little more attractive. But you know me, you've seen me do inverse bets on currency, which I don't do very often, something that esoteric. But I will take bets that are off the beaten path and not just a normal stock market thing. And that's because they have ETFs now that you can do almost anything with.
All right, that definitely makes sense. So if our audience wanted to find out more about any of your services, how can they do so?
Well, you could go to my website, theStockTradingCoach.com, and let me just tell you a little bit about my service. When I designed this, I designed it for whether you're a beginning investor or you're an experienced investor, this service is incredible. And I designed it for, even if you're a beginner, how to get started quickly and by the end of 30 days be trading profitably. Now, what this service does is you basically get an email 5 nights a week, and it lays out my thoughts about the market like we've just been talking about, but my game plan for the trades for the next day, exactly what the orders are to put in, why I think it's the rationale for the trade, and I'm basically your trading coach and mentor, throwing in my secrets of trading tips, things I've learned over the years. And it's like getting 20 years of experience all thrown into one package. And the good thing is I write in ways that an average person can understand, you know, not just somebody who has a financial background. And when I offer it to you, I offer it in a way that is absolutely no risk to you. Like for your listeners today, if you go to theStockTradingCoach.com and sign up for the 30-day free trial, that right there is a $99 value. And I'm going to give you a free 30-day trial with the picks and everything. Then I'm also going to give you a paper I just wrote on 20 trading secrets to make money like a pro trading stocks. And that I usually charge $10 for that. And it's a very quality written thing. And once you read that right there, you'll see, wow, look at the years of experience I get from this for, you know, I'm willing to give you that just for free. And then all I ask that you do is read my thing regularly, watch the stocks, see if it's for you, because, you know, hey, a lot of times certain stocks aren't your kind of personality and everything, and I understand that, but most of the people are always happy with it. You see the money that can be made, and then we're off and running. And I'm really excited about this. I haven't been back in the stocks writing like this since 2008, and this is limited to 300 members. The reason I do that is the stocks that I trade are not General Electric and stuff like that, so I can't have 1,000 people going in there trying to buy it and sell it. So I limit it to 300 members to keep the information edge, you know, and this is I'm really excited to be doing this again, and I want people to make money, and I want to help them make money,